Okay, well, let's move on to the M&A side of things.
Okay, I just wanted to cover a story that broke yesterday afternoon after we'd gone on air, and this was the bid by Shire Pharmaceutical, which is SHP in London, trading around £54.50 today. They launched a $30 billion bid for their US rival Baxalta, BXLT in the States, trading around $37.30, up around 12.5% on that news by the close yesterday. The company's management had spoken over a month ago, but the Baxalta board is not interested in doing a deal. Shire decided yesterday to approach shareholders directly with this formal offer. In terms of the value of the deal, it would be worth around $45.23 for each Baxalta share. That's roughly a 36% premium to the closing price on Monday. The deal is all paper though, so no cash element at the minute, and that's to preserve Baxalta's tax status, which came about the way that they were spun out of a company called Baxter International. If the deal were to go ahead, it would be quite transformative for Shire. It would turn them from an old style drug company into a more dynamic biotech firm. But a couple of analysts have pointed out that by recent standards, the deal terms are not super attractive. I think 50 to 60% has been required as a premium to seal some of the recent deals in the pharma sector. The key for Shire is the pipeline, a promisingly pipeline of drugs, and they think it could, if they get hold of this pipeline, increase their revenues to around $20 billion per annum by 2020. So they're playing for quite high stakes. To try and tempt people into accepting the deal, they've said that if it goes ahead and it's successful, then they'll start the share buyback worth about $10 billion as soon as the deal's concluded to try and ramp up.
As I understand it, the premium may be a little less in order to help Baxalta's tax status. Is that right, or is that the way it works, or is it the other way around?
I think my understanding is that the tax status is okay regardless of the size of the offer, if it's all in paper, because shareholders swap one like for like. But I think if they introduced a cash element to the deal, that would clear the pitch there, which I think is why they're offering this share buyback carrot to say to Baxalta shareholders, yes, if you accept the paper, we'll give you some cash after the event. So that's their tactic for the moment. Let's see what happens from here.
Okay.